Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. The purpose of this channel is to help as many people as possible become independent and profitable traders. So if that's something that you're interested in, make sure that you subscribe to my channel. If you get to the end of this video and you find that it's helpful, give me a thumbs up, leave me a comment to let me know what you learned, but more importantly, share this video with another trader who you think that it will be helpful to. If you think that the videos are just not helpful enough and you need additional assistance in trade ideas, you can follow me on TradingView or register for personal mentorship. And all of that information is down below in my description box. So in today's quick video, I'm going to be going over a trade that I actually dropped in the chat for my rich friends on August 14th, 2023, as we can see from the timestamp here on TradingView. Now, this trade idea was for as we can see down here, it was for a buy at market execution or a buy limit at 158.550. Now, this was a buy limit or pending order trade that did trigger. And when I set my, oh, it disappeared, but when I set my parameters for the group, it is based on the pending order. So I have a stop loss of 40 pips, a TP1 of 40 pips for a 1-to-1 risk to reward ratio, a TP2 of 60 pips for a 1 to 1.5 risk to reward ratio, and a TP3 of 80 pips for a 1 to 2 risk to reward ratio. Now, this was the chart when I actually dropped the trade idea. And as we can see, this trade actually did hit TP. Our entry was somewhere around here. And the trade did hit TP2. As we can see, it didn't quite make it to TP3, which was 159.35. So it was 2 points shy of that, but that's okay. We were still able to secure 60 pips in this trade. So we are going to go over the trading view, and I'm going to be breaking down why I decided to take this trade idea and how it actually played out, because we can see that it did hit our TP2 line. I'm going to put this thing in replay mode for a second and back it up to our entry candle, which was around 9 p.m. on Monday, August 14th. So with the strategy that I use 4 simple indicators. The first 2 indicators are on the top half of my chart. It's a 50 EMA, which is a trend line, and it's a 200 EMA, which is an additional trend line. Now, what you'll notice, and I say this in pretty much all of my videos, is that if the candles are above one or both of these lines, you'll notice that the market will tend to go in an upward direction, and you'll actually see more green candles than red candles, letting us know that the buyers have control of the market and they're willing to push the price even higher. Now, there will be times when the market will be going up, as you'll see, and then the market will start to hit a stall or it'll consolidate, which means that there's no clear direction. The market is just moving sideways, which is completely fine. But the key here is if the candles are above, right, the EMA, which they are, even though it may be moving sideways, this is just letting you know that price may continue to push up, right? Now, vice versa, if we were looking for a sell opportunity, when we see that the candles are falling below, right, one or both of the EMAs like such, you'll notice that the market will be on a downtrend. Because these EMAs are trend lines, they act as a sort of support and resistance for the market. So resistance is a place at the market where price is having a hard time getting higher than, which we can see here. And eventually the buyers will lose the fight and the sellers will actually succeed in pushing the price lower, just like when the candles are above the EMAs. Again, the market acts as, the EMAs act as a sort of support. So the candles are going to use that as a trampoline and they are going to bounce back up. So those were the first confirmations that I had that made me want to take a buy. Now, I know some people may get confused and say, well, the market was capping out right here. Isn't it going to sell because that's the area of resistance? And that's a mistake that I used to make a lot too. However, the key here is that the candles are still above the trend line, meaning that no matter if there's a stall or not, the market really wants to break and go up. So we have our first two confirmations at the top of the chart. Now, the third thing that I look for is my momentum line. Now, I like for my momentum line to be facing up, and preferably I like for it to be positive or above zero. These are confirmations for me, letting me know that the market was going to buy. However, I didn't have that confirmation this time, but I did trust my trend line indicators with my EMA, and I also did trust my stochastic. Now, the stochastic is a very interesting indicator because it tells us 2 to 3 things about the price, right? It lets us know that if it's facing up, right, most likely the market is going to be going up. Also, if one or both of these numbers are above 50, that's another bullish confirmation, and it's very slight. But if the blue line, as we can see here, is above the orange line, that's going to be another confirmation for a buy. Now, this trade may have looked a little bit suspicious or sketchy, and if you ever find that a trade is sketchy and you just aren't sure, just simply don't take that trade. But I am going to hit the play button and we're going to see how it turned out. This gray line here is my buy limit entry. So when the trade is there, it'll trigger. If it's in the red, it's in the danger zone. If it's in the green, it is in my profit zone. So we're going to go ahead and see. We can say that the trade pretty much triggered not too long after the idea was dropped. The trade triggered about 1, 2, 3 hours after the idea was dropped, which isn't bad. And then we can see that from this one candle alone, that's where TP1 and TP2 was hit. And TP3 was just really shy, just a couple of points, which is fine. The candles are still above the EMA, so it may actually just, again, use the EMA as a trampoline, bounce back up, and actually take us to TP3, leaving us with the 1-to-2 risk to reward ratio. So that's my strategy, guys. I really hope that this was helpful. I really hope that you were able to see the market a little bit more clearly. If you need more understanding about why I take my trades and how I take my trades, you can watch my playlist on YouTube called Forex Real Wins and Losses Explained. And again, if you need more assistance, you can reach out to me for a personal mentorship or subscribe to me on TradingView. All of that information is down below in the description box. But until next time, rich friends.